Tax season is underway, and if you haven't filed yet, you want to pay close attention to this interview. There have been a few changes that could impact your returns. Here now with everything you need to know is Kimmy Brown Ellen. She is the co-founding partner of Benford Brown and Associates, certified public accountants. Kimmy, I'm so glad you are here with this information that we need to know.
Yes.
And starting with the fact that a lot of people may be surprised that their returns are going to be different.
Yes,
this year.
it is going to be a tax season filled with people getting less in returns and some people owing when they haven't owed in a few years. And so people need to be prepared
Okay,
for
so
that.
what's driving that?
It's a couple of things. So for the last few years, we've received the tax stimulus under both administrations. That tax stimulus has gone away. So people who maybe didn't get it at the time, they were able to recapture it on their tax return.
Right.
That's gone. So
Okay.
that's the first one. The second one, there was an enhanced child tax credit. So if you had a child under the age of 6, you got a little bit more. If you had a child under the age of 18, you received additional tax credits. That has gone away. So if you have 2 children, you might be getting $3,600 less if you have 2 children under the age of 6 than you were getting last year. That's substantial. And so those 2 tax credits, that went away as well. You also have an above the line tax deduction for charitable contributions. This happened under COVID. So even if you were not itemizing your deductions and you took the standard deduction, you could take up to a $300 credit for making donations to charitable organizations. That went away. And then a lot of mutual fund managers sold municipal bonds and various stocks in your portfolio. And so you might be subject to capital gains taxes because you didn't know that those items were sold.
And so you're saying this is kind of just the perfect storm all happening right now.
In the same tax year.
And people need to make sure if you get hit with a surprise that you sit down with your tax preparer and say, hey, what can we do to avoid this situation next season?
Yes,
right?
And that's part of tax planning. And so you want to plan that throughout the year, but specifically when you receive that return, you see that tax return that they prepare for you, see what it is on there that maybe you can make adjustments. Because I'll bet that a lot of people, because they were expecting a certain amount, probably changed their exemptions at work and had less coming out. And so they may actually owe, or they'll definitely get less this year. And people need to be prepared for it, and don't get mad at your preparer. They're just following the tax law, but be prepared.
Okay, so talk to us about the changes for gig workers and independent contractors.
Yes.
That's a biggie.
That's a huge one because a lot of gig workers, first of all, we have a lot of gig workers since COVID. So you have a lot of gig workers who get paid with Venmo, PayPal, Cash App. It used to be that if you made more than $20,000, they would issue you what's called a 1099. Now they issue the 1099 if you've made more than $600. So for some people, now first of all, you're supposed to claim all your income, regardless of whether or not someone issues you a tax document. But for gig workers, they may or may not have kept track of everything, so they might have actually just relied on the 1099s. And so if they didn't get a 1099, maybe they didn't include it. I always would tell my clients, write everything down. Even if you're not using a computer software, write it down because then you know what you made. So now they're going to get a 1099. Maybe they didn't prepare, maybe they didn't save copies of their expenses, and so now they have income and nothing to show us for expenses.
Right, so that's a big change for people. As low as $600, you need to make sure that you're
20,000 to 600 is a huge change.
Okay, I've got to ask you about this because this is so fascinating. A new study found that there are disparities that exist in who is getting audited, and Black filers are getting audited at higher rates.
Twice the rate. So if you are a Black taxpayer and you have filed with an earned income tax credit on your tax return, you are twice as likely to get audited.
Okay, let's dig into why that is happening and what the government is going to do about that.
And so I think it's the algorithms that they use to select who gets audited. And in that, whatever the algorithm that they have put together, it just chooses people of color, specifically Black people, to audit more often. So sometimes children live with their grandparents, maybe their parents aren't in the picture, and so the grandparents claim them. Or an aunt, or we have a lot of kids that maybe don't live with their parents. They claimed earned income credit with those children.
And that's flagging in the system.
It's flagging in the system, and so the IRS has said that it's about twice as much getting audited.
So what do you think should be done about that?
Well, President Biden has actually put some money aside to say, how do we handle this? How do we fix this? And so one of the things that I suggested was that we tell people, make sure you understand your tax return. Don't just let someone prepare your tax return and then you sign it and that's it.
Right.
Understand it, because there may be something on there that you don't even know is incorrect, which is causing you to get a larger refund than you're actually supposed to get.
Such good information. Thank you so much,
Yes.
Kimmy. And for more, you can visit BenfordBrownAndAssociates.com.